Good Monday morning, everybody. I hope you had a great weekend. Kyle here, and I am just going to get kicked off on the Monday Mastermind this morning. I'm still checking, making sure we're going to be live on YouTube. It looks like Facebook is good to go, and now it looks like actually YouTube is good to go. So, welcome everybody watching, whether you're coming to us on Facebook or on YouTube. It's good to see everybody. Like I said, hope everyone had a good weekend, a productive weekend. We're in the fourth quarter, so it's the last quarter of this decade before we start a whole new decade. So, as always, some of the things that I'm already starting to kind of look forward to right now, being that it's the fourth quarter, is business planning and getting set up for kind of the start of the next year. And now is the time when you got to really start thinking about that stuff. So, I don't know if in most of y'all's business, if it slows down, if it picks up in the fourth quarter. I actually have usually a really good December, but I know historically my October and November are usually a little bit lighter than most of my other months. And so, that's always my time when I'm like, all right, I can go back, I can do things, spend some time a little bit more into the numbers, a little bit more into kind of just some ideas and really kind of like gaining knowledge of what I might want to start trying to do for next year. And in doing that, what I came up with as far as what we're going to be talking about today is I'm going way, way back and going all the way back to when I first became a real estate agent. So today we're going to be talking about my first year as a real estate agent and kind of just sharing with you guys, what the things that I learned during that time, what my numbers looked like during that time, where I got my business from. And all of that good stuff. So that's what we're going to be talking about today. And then, of course, if anybody has any questions or anything like that, then certainly don't hesitate to, put a question in the comments, put a question if you're on Facebook in the chat there, and I will get to your questions definitely at least by the end, if not throughout the deal here. So that being said, I'm going to go ahead and just get kicked right off. It looks like we got quite a few people watching already. So let me go ahead and start my screen share here. And guys, give me a thumbs up, give me a like if you can hear me, if you can see me. Just want to make sure that everything is coming through. I'm going to check on my phone, have this going live as we do this here. So give me 1 second to pull it up, and then we'll get started. All right, let's see here. Looks like. All right. Prop it up right there. Okay, here we go. Make sure it's muted. Okay, there we go. All right, perfect. I can see some thumbs up. There we go. All right, so here we go. What's going on, Rich? Good to see you. Heather, Tammy, good to see all you guys. Chris, hey, welcome to the call. Catherine, nice to see you on. All right, guys, that's just Facebook. Let's see, YouTube. We got, let me make sure we're looking good there. Go to open up YouTube. All right, good deal. We're looking good on YouTube too. All right, perfect. So we'll get kicked off, guys. I'm going to get my screen share going here just to go over kind of some of the first stuff. I'm going to go over some notes first and just kind of share with you guys as far as, so, a little bit about my backstory before I get into the numbers here. I started in general real estate in October of 2013. So literally 6 years ago is when I started in real estate, in general real estate. Prior to that, I had actually been in new home sales for roughly about 5 years, from 2008 till 2013. I worked for one home builder that entire time. I really kind of picked up my sales knowledge and skills from that home builder. Plus, I did pick up some past clients, a kind of a referral, a sphere of influence base. But as you'll see, what I did in my first year in general real estate was not unlike a lot of things that you guys can do as first year agents. Even though I did have that background, you'll see from my numbers that actually, what I really did in the business was, was friends, family, and the majority of things that, hopefully if you're in real estate, you've already, built that up, that sphere of influence in your market. If not, like if you move to a new market or you're in a different city where you don't know anybody or anything like that, I'll talk to that at the very end as well. But for the average agent that's out there that, maybe you've lived in your city for a few years now, you've picked up some friends, you're just part of the community, all that kind of stuff. That is the majority of my business. Although I did try a bunch of things, and so I'll talk to you about those different things that I tried as well. So in general, just to give everybody kind of an overhead view of it all, my first year in real estate, I did 40 transactions and did over $238,000 in gross commission income. Now, keep in mind though, that my first year in real estate was probably a little bit different. Some of it in the fact that I actually started up my own brokerage right when I got into the business. I started an LLC. I paid a separate real estate broker to hold his license for my LLC. So I was able to go out, help, get agents into my brokerage and start getting them to produce as well, which also, increased my numbers. And so out of those 40 transactions, I personally did 28 of them. And then I had 3 other agents that accounted for another 12 transactions. So just to give you an idea, I had an agent named Philip. He did 9 deals. I had an agent named Victoria. She did 2 deals. And I had another agent who did 1 deal. It was a personal transaction of hers. But altogether with their 12, my 28, I did 40 deals, and it totaled $238,000 in gross commission income. My sales personally, my 28 sales added up to $175,000 in gross commission income. This is my first full year. So, again, I started in October. I think I did like 4 transactions from October till January, but then basically January of 2014 to December of 2014, I did 28 transactions personally. Now, just to give you an idea, out of those 28 transactions, 21 of them were buyers, 7 of them were listings, and then I also did 7 rentals where I helped clients find a rental property to live in. So all of that added up. Let's see here. So it was the 175. The 175, the way that was broken down is I did $97,000 of that GCI, of the 175, was from referrals. And I'm going to actually break down my referrers so you can exactly see what type of people typically give referrals and give referrals in my first year of business. 58,000 were sphere of influence. And what I mean by sphere of influence is they were friends, family, of me that knew me and did business with me as soon as I got into real estate. And then 17,000 came through Google ads. So I did quite a bit of Google advertising, and I'm actually going to show you how much Google advertising I did in my first year. That way you can kind of see it all broken down. And then the other thing we're going to do on the call today is I actually I had to go back to my tax returns because back then I wasn't as good with my bookkeeping. I didn't have QuickBooks or anything like that back then. I did keep some logs, but I couldn't find them. So I had to actually just go back to my taxes to see what I filed so I knew how much in deductions that I had, what I spent on my business to earn that amount of business. So I'm going to go through those numbers as well in my first year of business so you can kind of get an idea of what I was spending back then. So all right, so let me share this screen again. So we're going to dive into the actual numbers. For privacy reasons, I've gone ahead and shortened their last names. I've taken the addresses out, but I want you to see, this is just my transactions. I took out, my other agents' transactions out of the deal here. So these are just mine. But you can see here, starting back in 2014, January, right, going all the way to December 23rd was my last transaction. And you can kind of see here that, if anybody asks like, hey, do you do rentals when you first get started? I definitely did, right? Like, I think if we added it up, it was something like maybe $1,900 I made in rentals from those 7 that I did in my first year. And you can see here, rental, literally kick off the year. I did 6 rentals out of my 7. And I guess maybe that's why I started to build a team so quickly, or build agents into my brokerage at that point, was because I was like, oh my gosh, this is a lot of work, doing all this. I was running around everywhere, and I was like, well, maybe I can find some other people to help me with the rentals, and I can focus on buyers and sellers. That was kind of my thinking going in. But the one thing that I will say to all of those new agents out there that aren't sure if you should be doing rentals or not doing rentals, financially, it really wasn't something that, was lucrative for me. But it did actually do a couple things for me that were positive. One, I can actually look at these names of renters, and I can find, now I'm 5 years later, I can see out of those renters right there, 4 of them have either bought a house from me, or they've referred me somebody who has bought or sold a house from me. And so, it's not the short-term game. That's not for, that's for sure. It's the long-term game. Just out of those 6, I've got 4 there that I recognize the name. I know that they've either now bought a home from me, or they've referred me somebody who has bought or sold a home from me. So that is kind of what the advantage of doing rentals are early in your career. Now, the other advantage is it made me feel busy. It made me feel active. I wasn't just sitting at home, doing nothing all day. Even if I was making 150 or $200 on a rental, it was worth it for me to be in the game, right? To go out there, show houses, to, kind of know how to, drive around neighborhoods and see things and explain things to clients and buyers, and get them to fill out a, IBS, or, if you're in Texas, IABS form, or, a buyer's representation form, all those types of things. I had to go through the process to get good at it. And rentals were great to kind of practice on, if you will, because, again, most of those clients that were doing the rentals, they were just thankful that there was an agent willing to help, because there's so many renters out there that they don't have somebody that really, most agents are going to pass on them. And so, if you actually spend time with them and you treat them well, you're going to stand out. And so, and again, that's kind of what I did. You can see here that that's where I got started at. And then let's go ahead and start moving on to some of these buyers and seller deals. So I like to break down too. I said, I was going to break down my referrals so you can kind of see where they came from. One of the ones that I started to realize was, this one should say new home as well. I kind of have 2 different ones there, but a lot of what I came from, because I came from the new home industry, I understood how it worked as far as, making friends with new home builders, like the salespeople out in those offices, because then you could then get referred business from them whenever they had a client that would come in for a contingent kind of a deal. And so that's what I did is, I had some friends already from the business, but then I also made it a part of my business plan to start befriending a lot of those new home sales counselors. So I would go out, I'd bring coffees to them. I would go and take some to lunch, and I would go sit in their office for 30 minutes or an hour, and I would just talk to them, see how things are going. And because of that, I got a significant amount of business. I mean, if you look at my referrals here from that year, KDS, I got a new home referral from there. And that was a buyer deal. Literally, I think they put me on the contract. They had a lease that they needed to break or, get out of. So I helped pay that lease, but I got put onto the deal, just for helping out and just for having a relationship with this agent. And then if we go down here, for I got Alicia B, gave me a couple deals in June and July. Tim H gave me another, and these were all listings at that time. That was the only time that I was really getting listings, was from my new home people. As a new agent, again, the majority of my deals were all buyers, but I did have 7 listings, and the majority of those 7 listings came from the new home referral deals. And so that's a great way to get your name out there for listings, to start getting, experience to be doing it, is to, get in friendship with some of these new home builders, and they'll help you out. So you see here, I got 1, 2, 3, 4, 5, 6, 7, 8, 9 deals out of my 28 were direct referrals from new home builders. That's a huge, huge source. I think it's untapped by a lot of agents, but it's really easy. And it was actually a lot of fun. I mean, a couple of these people I had met after I got into general real estate. A couple of them I had already known. So the majority of what I was doing was just, going in, having a chat, having fun, talking, right? It doesn't have to be anything crazy, like you don't have to be intimidating or intimidated. If somebody, you go in and they're just not friends to you, then go to the next one. There's so many new home buildings, at least here in San Antonio. I'm sure, in most places, there's a lot of new home builders, and it's all about that relationship you can get with that sales counselor. And you never know where that relationship with that sales counselor goes, because eventually what ended up happening, this isn't in 2014, but 2015, 2016, is that new home sales counselor, I would do really good on those listings that they would give to me. I would sell those contingencies, which is of course what they want, because then they can, complete the purchase on their new home. And so I would do that. My track record was excellent. I'd sell every single one that would come into me, and all the clients would like me. So then that sales counselor would go talk to their manager, and then the manager would have me come in and talk during a sales meeting and, bring tacos and do that whole thing. And I get to meet other salespeople quickly. And then from there, that's just where that business took off. And, 15, 16, even 17, I did a lot of new home business. I still do some, into 18 and 19. But it became less and less. I started kind of getting focused on my team, getting focused on my brokerage, especially back in 2017, that I kind of got a little distracted from personal production. And so I didn't really grow that side of the business probably as big as I could have. It's definitely, looking back, kind of maybe a mistake that I had made. But it was certainly something that was building, traction as I was doing it. And so anyways, you can see there, that was, a significant source. I just want people to see that. And then if we look into here, so outside of referrals, again, most of those rentals all came through Google advertisements. I wasn't advertising for rentals by any means. I was, actually doing advertisements for people that were looking for homes for sale in 78258, homes for sale in 78260. Homes for sale, and all these. So they were looking for homes for sale. It's just most of those on the internet that I came across, especially early on, maybe I just didn't know how to pre-qualify people or get them, pre-qualified better to where they could purchase. But most of them just didn't qualify, so they had to rent, or they might have been looking for homes for sale, but in their mind they were like, yeah, we're going to rent right now, and then we're going to buy a home. And so that's kind of the majority of the people that were on Google early on. But I did start to get a couple. You can see here, I had one sphere of influence deal. This was a friend of mine that was wanting me to sell their home back in 2014. That happened early on. And then let's see, I got my first Google ad buyer deal. And I'll never forget these. It was a young couple, first time home buyers. I loved working with them. That was an amazing deal. I remember when that first time one closed, and I was like, oh my gosh, this is actually working. I can, spend money on Google ads and it can turn into commissions, right? Like it was like $4,500. And I was like, man, I was looking at what I was spending in ads, and I was like, man, this is a no-brainer, right? I'm going to keep going after this. And I did, and I still, kept building it for years and years and years. I did Google ads and Facebook ads, but I look back and it's funny because 2014, this is when it all started. But if we look here, let's see, go to referrals. I had a referral deal that was, again, just a friend of mine. I had actually helped them sell a house back. They were one of my first 4 homes that I'd sold back in 2013. After I started in October. It's not on this spreadsheet, but one of my first 4, her name was Katie. And then, she referred me a deal back in April of 2014. It was her brother there. And then let's see, I had another Google ad close shortly after that one. I think this was all in the same month. Yeah, if you look at here, it was like 4.3 and then 4.9. So Google ads were starting to come through, and I'm like, wow, this is really working. I started like ramping up the spending. That's when I was like, I'm, helping my team to start to produce. And, I had those agents on my team that I was giving deals out, some of these deals out as well. But let's see here. So we got another referral. I had a realtor referral. This was actually an agent that's in San Antonio, and she just was going to be out of town. She was just so busy. And luckily I'd made good connections with other agents in San Antonio, and she had given me this deal. And if you look at that here, I mean, it was an expensive house at that point. $394 is my most expensive home that I'd ever sold. I think I kicked her back, 1%. So I kept 2% of that. That wasn't a bad deal there. Then I had Sphere of Influence deal. I had another Google ad deal here. And it was funny because with this buyer, I actually ended up selling his sister a house right down here. So, it was kind of for one Google ad. Like, I mean, granted, I was running thousands of Google ads, for different zip codes, probably not thousands, but let's just say 50 or 40 or something. It was quite a bit, but I was running a bunch of different Google ads. But for one, he came in off of a Google ad, and then eventually he referred his sister who also bought. And I just put Google ad because even though it was kind of a referral from him, it still wouldn't have been there if it wasn't for that original Google ad. I had a buddy here that bought a house. Let's see, a couple of referrals from friends. So, this is when, I started getting some friend referrals, or it was just, they knew that I was in real estate now. They referred me some business. But one thing you won't notice, I would have thought that this would have been higher because, again, this is after 5 years of being in new home sales. But the one thing that you don't see a whole lot of is I didn't get a lot of repeat or referral business from the new home sales business, right? Like I had helped probably, I don't know, at least 150, if not maybe closer to 200 families buy new home sales or buy new homes when I was with my builder for 5 years. But, and a lot of times, I even before today, before I really dug into the numbers, I thought that a lot of my deals had come from referrals from them. But when I look back at my numbers, especially early on, at least, not many of them came from the actual new home clients that I had made over those 5 years. And so, but these were just friend referrals. This was a sphere of influence, a friend of mine from high school. Let's see here. Went back down. That was the Google ad. That was the sister. Let's see, referral. So this was a referral deal. And I guess technically it should be considered almost 2 referrals. I have it as referral and then sphere of influence. It was a buyer and then a sell. So like I had to sell their house and they were buying, and it was a referral from my brother-in-law. And so I guess, back then I didn't know to classify if it should have been referral and then, sphere of influence, because now I've already helped them one time. But either way, I would probably now, looking back, classify that as 2 referral deals because, again, they both came from my brother-in-law and wouldn't have had those if it wasn't for his referral. Let's see. Got back into new home. I had a friend referral again. And if you noticed here, I think, this one, it was kind of funny. So it all started with this friend of mine, Brandon R., referred me a buyer, Bo S. I helped Bo buy a house. Bo then referred me to another, person that was a coworker of his, Jessica H., later that year. And so that was obviously a good deal. So they all, kind of transpire. I mean, it all starts, either from a friend or whatever. That's where the majority, 90% of my business came from that year, was from referrals and sphere of influence. Let's see. The other one that I like to point out too is I actually did get 2 lender referrals my first year in real estate, which, I mean, honestly, that helped out quite a bit. A lot of times we don't think of lenders or partners or people like that being able to give us referrals. And I think, why not? Like, why shouldn't they? We're giving them a ton of business. Why wouldn't you want to ask them to get you business? And that might be a little interesting or tough conversation, or maybe they have reasons or they're whatever. But at the end of the day, I mean, I think that's so important is that you work with somebody who, if you're sending them stuff, hopefully on occasion they can send you something. And so sure enough, that month, was that August, was pretty good month. I mean, I had 2 of my lenders. These were both, I always kind of had 2 lenders that I would recommend, just so that way I'm not just like steering them one way. And in that month, I actually got one referral from each of them, which was pretty nice. One of them was a $470,000 listing. And these people here ended up coming to, I'm still great friends with them today. They've probably referred me at least 4 or 5 deals since 2014. And so again, this, just that kind of stuff stacks up. If I could title this anything, it'd be like the hustle of the first year. I was out there hustling. I was talking to people, doing lunch, moving and shaking, right? Like just telling people like, hey, I'm hungry, send me business. How can we work together? Like that was kind of the theme of this year. I was either at home, working on Google ads and getting that stuff to where it was like a systematized thing in the background, or I was physically out meeting people, talking to people on the phones, prospecting. That's what this year was 2014. I just look back and I see all these different things and I'm like, oh my gosh, I remember what it took to get all of this business. And so let's see, sphere of influence. So now here was some more new home referrals. This one was a deal where it was a sell and a buy side. I got on both of them. And then same thing over here. I had another sell and a buy side. So Gilberto T and then Simon and Desiree A. So both of them and Will K. was from, yep. So another one. So, I mean, if you look at that again, 9 out of my 28 deals were from new home sales counselors. And again, I didn't have the builder account. I know a lot of times like people think of it as like, oh, I got to go get the account by this builder. That's not what it was. I was just being friends with the individual new home sales agents at this point. I had not any builder accounts or anything like that. It was just befriending the new home sales counselors. And it's a numbers game. It's the same thing. I would make it a thing where I know a lot of people that would go out and do open houses every weekend. Well, instead, I would go out and I'd go visit with the new home sales counselors. I'd go talk to them. I'd sell, offer to sometimes help them do do open houses on their spec homes. I would offer to help sit in on their model homes. I was just trying to be friendly to the new home community, and it paid dividends. 9 deals out of my 28 that year. So if you're thinking about another source of business, what you can do for maybe next year, that's definitely something that I would say is pretty viable. So, all right, let me see here. Now, the next thing that I want to jump into with you guys, now you can kind of see a deep dive on where my sources came from in my first year of real estate, is I want to dive in. Well, actually, let me dive into the comments real quick and just make sure I didn't miss anything, guys. All right, I see a lot of people watching. What's up, Curtis? Good to see you, man. Trent, what's up? All right. Good stuff, guys. When I see what's on YouTube, make sure I'm not missing anything over there. Ooh, got a lot of people on YouTube. Okay, cool. Let's go into the comments, guys. And again, feel free, put a comment in the chat if you're watching on YouTube, if you're watching on Facebook, if you just have questions. If I'm going over something too quick. And let's see, I love it, Melanie. Good to see you. What's up, Gerardo, Latrice, Brandon? Hey, good to see all you guys on YouTube there. All right, I'm looking. I don't see it doesn't look like I missed any comments, I don't think, on YouTube. So we're going to keep going, guys. I'm going to kind of get into the next thing here. So, all right, let's see. Where did I put these? I think they're in my... Yeah, so let's see. Here's a screenshot. Make sure this is it. Yeah. All right. So this is just so you guys can see. I want everybody to be really clear. So I actually, at this point, I don't know the discrepancy between it. It's not like a huge discrepancy. But again, I made 173 GCI, but for some reason my taxes from 2014 show 167. I'm sure there was something. I just didn't have time to really figure out what that $6,000 difference was. And then as far as taxes, they depreciated, my CPA did $11,160 in depreciation. I know part of that was from buying a vehicle. I bought a SUV and met the 6,000 pound whatever, and it qualified for Section 179. So if people aren't familiar with that, talk to your CPA. I'm sure they can, give you some advice and guidance. At this point, 2014, I already was set up as an LLC. And then my CPA helped me this year to be classified as an S corporation. So again, I'm not a CPA, I'm not a tax accountant or anything like that. So by no means is this tax advice. All I know is this is what he told me to do. I did it. And basically, he helped me on my taxes, saved quite a bit from just being, a self-employed individual, taxpayer. So anyways, this is how it was set up. I had some depreciation. I spent about $22,000 in advertising. All right. So that was for Google ads and, all that kind of stuff. And on the surface, if you actually think about it, in Google ads, let me go back to my spreadsheet here. I know that I did not make, just from that source, let me pull up how much I actually made. I think I lost money, even though I did, I closed deals and all that kind of stuff. On the surface, I lost money on my advertising up front. Let me see here. Spent $22,000, and let's see, in GCI, let's see, buyers, sellers, renters. In 2014, I made $19,324 with the rentals in there. $19,324. That's what I made from Google ads that year. But so on the surface, I spent 22,000 on those ads. And at that point, at this point in time, the only thing I was doing as far as advertising was Google ads. I hadn't jumped into Facebook ads or anything like that. And so it was just Google ads at this point. So on the surface, it looks like, oh man, that's a negative thing. But I'll tell you, knowing what I know now, even though that year, yes, it was negative, the amount of money that I've made since then, because, I started building my database. I had, clients and leads that were in there, and maybe they didn't buy a house from me right then, but I had built a relationship with them. I had stayed in communication with them. So, even out of, say 50 leads that I would have generated, if only one or two bought that year, I would have another 1, 2, or 3 that would buy the year after, and then a year after that, or I'd get a referral from one of them, even if they couldn't buy themselves. And so over the years, they've now continued to pay themselves off. That's why I think, a lot of times agents will get into that mindset where, like, if it doesn't pay off in 3 months, like, I'm cutting it, right? Like, they just, they're so, it's like short-sighted, where like you want that instant gratification, that instant deal. But honestly, I mean, that's not the way that it works. You got to build this stuff up, and I'm not saying, to do things just, haphazardly forever, just because, you got to give it time to progress. But I mean, I think that it warrants you at least, talking to people, trying to, like, because the one thing that I did when I was doing my Google ads was I never just was satisfied. Like, I kept always doing them, but I was always like reaching out to other agents. I'd be part of forums, be reading Reddit, all different sources, and watching YouTube, all this type of stuff, and seeing like, well, what's this person doing? What's this person doing? How can I improve? Is my numbers in line with what they're getting? And so that's what I was always constantly doing, but I never stopped just because, the return wasn't there. So just something to note there. Now, the other thing here, if you can see it, oh, here, actually, I don't know, you can't see the bottom line there. So anyways, you got to see there is other deductions was 32,320, which I will get, I've got a breakdown onto that and show you what that is. So then total ordinary business income was $101,000 for that year. So they basically took the 11, the 22, the 32, it equaled 65,000 in deductions. They subtracted that out from my 167, and 101 was my taxable income, I guess, or ordinary business income. I'm not sure the difference, but let's see. So now I want to break down that 32,000 so you can kind of see what I was spending that money on. Well, I guess that was it. Here you go. So this is how that broke down there. Pull it right here. So they took so automobile and truck expenses. That was just, driving around in my vehicle. I think I took, of course, like gas and maintenance and all that kind of stuff out. Gifts. This was, of course, closing gifts for people that was, and I guess, again, I'm not a CPA, so whatever I say here, check with your CPA before, actually doing it. But I know for the gifts that I'd given, they were always personalized, right? Like a lot of people, they want to just give a $50, Starbucks, or no, probably not Starbucks, but maybe Target or Home Depot or whatever gift card. And from what I understand is it needs to be personalized. It needs to be something that has your branding on it. So then I started giving out cutting boards with, the Handy team, Kyle Handy, my cell phone number on the back of it, it'd say like welcome home or whatever on the front of it. And the reason I did that was because if it had my advertising, I could write it off as a gift expense. So anyways, just something to check into there. Insurance, I had my own E&O insurance. Again, it was my brokerage at this point in time. I wasn't affiliated with a different, brokerage. It was just Handy Realty. I'd created it. I had a different sponsoring broker sponsoring the company, and that's how I kind of ran it there. So I had to pay for my own insurance, $1,088. Legal and professional. So this was, again, I think that year I had to, of course, set up the LLC. I had to get my taxes. That includes, filing my taxes and a few other things. Meals and entertainment, which again, they only could take 50% of that, $1,900. Permits and fees. I think this had to do with like training and education, my dues and all that kind of stuff for becoming a realtor or being a realtor. So these were kind of the fees that were associated with that. Supplies, that was just, office supplies, random stuff that I needed. for my office. I'm sure there was probably, a camera in there, or, random stuff like that, or a TV that I had to buy for my office, so that's why, you got $4,700 there. Telephone, that was basically my telephone bill. At this point, I was working out of my home. I didn't have a brick and mortar office or anything like that. I was working out of my home-based office. Let's see, training and continuing education, just a little bit that I was spending there. Internet, $1,100 on the internet for my home. Wages and subcontract work. So again, I think I had some. This wasn't, my 1099 agents, like, Philip and Victoria. Them, they were 1099. There was something different, like that income didn't even come into my income, the 167. That was taken out even before that, because again, I think, like I said, we did 200 and some odd thousand, 238,000 in gross commission income that first year. But as you see, even on my tax returns, it's only 167. It's because I 1099'd them, before all that even came out. So these wages and subcontract, I don't exactly remember. I think maybe I did work with some virtual assistants back then. I did have, I think, like a part-time helper for a little bit. So it was just like small stuff that I guess I didn't W-9 or 1099 somebody for. And then the home office calculation, I guess that's just something that my CPA had created. So you can see there, that's how that 32,320 came up, which rolls into here. And again, 101,000. So that's pretty much, that's my first year in real estate. Let me make sure I wanted to share. Yeah. So again, some of the biggest points that I wanted to make were, my buyer versus listings kind of breakdown. I would have literally probably been, all buyers. Maybe I had one listing that wasn't new homes from a new home referral. Had it not been for my new home relationships. And so, for those of you guys, if you're new into real estate, yeah, it's super important to go after listings. I know for me personally, that wasn't the way that I went. I was going after buyers. Looking back now, 5 years in, I probably would have put more of a focus on FSBOs and expireds. As intimidating or as, maybe scary as that might be for some of you that are like, oh, I don't want to be on the phone. I don't want to be rejected all the time. I'll be honest. Listings truly now is where it's at. Like today, my business, I would say, is probably closer to like 70-30 on the listing side. And that's allowed me freedom into my life. I'm able to, basically do a lot more with my day than whenever I used to just be working buyers all day long, selling 2, 3, 4 buyer deals every single month. That just means you're constantly out driving, you're constantly out showing, which again, it's great. I loved doing it. I actually love showing houses. I love seeing different neighborhoods and I love seeing homes. So if that's you, not knocking it, it's definitely a legitimate source of business. And for me, it was just a natural kind of transition from, I helped a lot of buyers, and now those buyers are looking to sell homes, right? And so now I'm starting to get more and more listings, and now my listings have finally taken over my buyers, just because I'm not really doing any buyer advertising at this point. And so I still get buyers just because people are repeat buyers or whatever, or a referral. But at the same point, I did more of just kind of an organic, hey, I'm going to do buyer advertising. I'm going to get mostly buyers. When you start, most of your referrals are going to be buyers, or especially if you're doing some advertising and you're helping renters, those renters are going to turn into buyers first, right? They don't have anything to sell just yet. So when they do maybe rent a house for, 12 months, when they come back to you that year later, they're going to be a buyer, right? So not knocking it. I just know now that it is a trade-off, right? Like you're going to give up way more time working with buyers than you do listings. And so for me, I don't mind picking up the phone. I don't mind prospecting. I've gotten more familiar with that over the years. And so, going straight to getting after expireds and for sale by owners is probably what I would do today. But, who knows? Again, as far as where you're at, what you want to do, I say just do what you think sounds, like you're going to be able to stick with it the longest. Because again, the one thing that I'll tell you is it's got to be a natural thing. For me, like, if I did something that I didn't want to do, I didn't do it for very long, right? Like I only liked doing things that, that I enjoyed doing, right? Like long term. And so like for me, it was, the people that I, associated with in the past 5 years, it was going to new home sales counselors because I knew that business. I felt comfortable there. I liked doing it. So I had no problem, spending, hours out of my weekend or, during the week, going out and building those relationships further. I had no problem, reaching back out to my sphere of influence and people that I've known in my life over the years. So like those types of things were comfortable for me. It allowed me to keep doing it. And so anyways, and then I just built from there. So I built and built and built. So anyways, I say, do what kind of makes you feel comfortable, and you kind of have some framework here. Not saying you have to build your business like what I did, but you can at least kind of see where it goes and, what it can look like in that first year. And the biggest thing though is, like I said, if I had a title for that first year, it was that, hustle. Like I was so into it. I was so into the game. I still am into the game, but it's a different feel now. Like now it's like more of like a maintenance thing. I'm focused on different things. Of course, I've got a, family now. Back then, my daughter was just about to be born, and now I've got 2 little kiddos. So it's a whole different thing now. But at the same point, like all, my entire business life, which was pretty much my entire life almost, I'd say a good 75% of my life back then was, business related, and 25. So that work-life balance probably was a little off kiltered back then. But at the end of the day, I loved what I was doing. I was getting some traction. I knew what it was going to do, especially now, I look at myself, 5 years later, and I'm so thankful that I put in all of that work back then, because it just built a foundation for where I'm at today, to where it's like I've not stopped doing any kind of work by any means. I still work very hard, but I can do things like this where I give back and I do trainings and I teach agents and I, help, build kind of what I'm building here with my, YouTube channel and my Facebook and social media presence. I can do all that type of stuff, building my personal brand where I'm not so focused just on the real estate sales side of it anymore. And really, I could be doing anything at this point. Like if I didn't really want to work at all, I could just have taken a step back and just, had a kind of an easier life, but only because of what I did in those first, few years of real estate, building that foundation. So for those of you guys that are like, man, I'm grinding away, I'm not having the success that I want. Hey, trust me, just keep going, keep always learning, keep always hustling, keep always networking with other people, other agents. You never know where those relationships go. And it all will pay off. It's just, you can't quit, because if you quit, then it's like everything was for nothing. So anyways, that's what I'm going to leave you guys with as far as what I'm going to talk about. I'm going to look into the comments one last time here to make sure I didn't miss any questions. And if not, then I will see you guys the next week. Let's see here. Looks like YouTube. That's right. Tim Power. Good things happen on the streets. Man, that was something that Tim was one of my agents. I guess we started working together maybe a year and a half ago or so. And we talked about that at a listing where a guy didn't even show up. Quick funny story. We go out there, I think this was Tim's first listing. And so he wanted, me to go out there and help him with it and, just kind of be out there with him. And so I did that, and we go to the listing, and it's like, kind of going kind of on the southern side of San Antonio. It was probably not in my normal area that I would go to, maybe 40 minutes from, where I'm from. And anyways, the guy doesn't show up, and I think Tim had confirmed and all this, but he still didn't show up. But I said, hey man, we're still out here doing stuff, like we could have been sitting back, we could have been doing nothing, even if the guy didn't show up, don't worry about it, Tim. Like good things will happen on the streets. Like when you're out and about, you're just doing stuff, good things happen. And sure enough, I think at that point we met a guy that was like going door to door, putting cards in the door. He was a real estate agent, I believe, and trying to, buy, distressed properties, I think is kind of what they were trying to do. Or maybe he was just trying to pick up listings. I don't really remember. But sure enough, now I think that guy works on Tim's team, and I don't remember the other good things that happened from it. But even just from something we thought was nothing, it ended up benefiting Tim, which is pretty cool. Love it. Hashtag hustle hard. That's right, Tammy. All right. Trent, I'm planning on holding open houses in new builds starting this weekend. Love it. Good stuff. One suggestion I'll give you is be aware of your price point, right? Like, when I was in new home sales, my average price point was 3 to 4, maybe high twos, 275 to 350, I'd say realistically was my average. And we didn't get a lot of traffic, I'd get, on any given weekend, we would get maybe 4 to 7 registrations, like 4 to 7 visits. And a lot of the times they had realtors. So, be mindful of what price range you're going to go in at. I know a lot of agents that have had success, even though maybe they're not your favorite homes or whatever, they've had success going into like the KBs and, the KB builders and the Lennars and, kind of that lower price point. And again, regardless of what you feel as far as like, if that's the house you would buy or whatever, people are going to buy them, and it's typically going to get you more traffic. And a lot of times when you go into that lower price point, you're going to find people that don't have realtors, where if they're looking at 350, 400, most of the time, this is a second home for them. They've been through the game before. They kind of have a realtor or, friend. But if you want to stick to kind of that new home builder, you want to stick to areas where you're going to get good traffic. So anyways, that would be my suggestion there on the new home side. Let's see if I missed anything else. All right, looks like we're caught up on YouTube. Let's see on Facebook. Did I miss anything? Let me know what your thoughts were. And guys, just as a quick aside here too, I'm working to make this into a podcast. I actually got a guy that's converting all of my videos to podcast, and I should have that out here pretty soon. Yeah, he's going through all of my Tuesday masterminds that I do for EXP agents, and he's already been creating that. If you go on the Apple Podcasts, and I think it's on Spotify, it's everywhere, and you just type in Agent Attractors, you'll find my podcast for that. And I've already got about 10 episodes maybe on there, and I'm going to be having him jump into this next. And it's just, I think this is just the Kyle Handy podcast. And then there's a subtitle that says something about real estate sales training. But all of these are going to get converted over to podcast, which is nice because honestly, guys, if you guys aren't into podcasts or if you don't know yet, podcasts are on the rise. Like, I've been listening to podcasts for years, but I'm telling you, like the numbers of people that are, starting to listen to podcasts, just because it's so easy, in your car, at the gym, while you're, doing things around the house, that's it's just been going up and up and up. And so, I know videos are cool. It's live. You get to see, get to interact. But at the same point, I know a lot of times, especially as real estate agents, we have a busy schedule, busy lifestyle. Maybe you're in the car and you just want to listen to some stuff. Well, that's what we're going to be doing here as well. So you should see that here pretty soon. All right, I'm still loading up here my Facebook page just to make sure I didn't miss any questions on there. I think we're good though. See, YouTube's good. I'm not going to create a post. Let's go to videos live. All right. Yeah, here we go. 16 comments. Let's see. KB is where I plan to go. Exactly what I was thinking. Good to hear, Trent. Love it. All right. All right. Good stuff. I don't see anything else unless I'm just don't know how to click in here. Oh, here we go. All right. We had a couple people sharing. Love it. Thanks for sharing these videos, guys. I love it. All right. Doesn't look like I missed anything. So perfect. Well, guys, everybody, I hope you guys have a great Monday afternoon. And, go out there, make it happen. If you're in San Antonio, we should be getting some warmer weather.